Good evening. My name is Erin Mintzberg, and I'm the District Director for Congresswoman Lizzie Fletcher. Thank you so much for joining us tonight on a webinar on changes to the National Flood Insurance Program. Many of you submitted questions ahead of time tonight, and we're going to try to get to as many as we can. If you are not able to submit a question or you have another one that pops up this evening, you can click on the Q&A icon at the bottom and type in your question. Please include your email address because we will be following up with everyone when we conclude later this week. Again, thank you so much for joining us, and I will hand it over to Congresswoman Fletcher.
Well, thank you so much, Erin, for getting us started, and thank you to everyone who's joining us tonight. I am glad to be here with all of you. I know we had a very large, probably record turnout for a Zoom event that we've done, and it really isn't a surprise because this topic is so important, as are the folks that we've assembled tonight. So I'm really grateful to be here, of course, with Councilmember Abby Kamen, who is just a fantastic advocate for her constituents, our community, couldn't be a better partner, as well as Chief Recovery Officer Steve Costello, who I have been talking to since before I assumed this office, talking about how we could work on flood mitigation and recovery in Houston. And he's just such a leader and so thoughtful in really helping our community respond to the challenges that we have. So thanks to both of you for being such collaborative partners and vocal advocates on these issues for our constituents. And I also want to thank Gilbert Quirone, Regional Flood Insurance Liaison from FEMA, who's joining us tonight and who will give a presentation very shortly. I'm going to just do a few opening comments here and then turn it over to Councilmember Kamen, and then we will turn it over to Mr. Quirone, and then Steve Costello will wrap up. Then we will turn to your questions. And so in order to get to those, I'll move very quickly, but I think it's important to remind us all why we're gathered and how excited I am really to kick off this program to talk about the changes to the National Flood Insurance Program that are taking effect right now for new customers, and in April of next year for existing policyholders who have flood insurance through the NFIP. It's an especially important issue in Congressional District 7, as well as in Houston City Council District C, where we have experienced repeated and devastating floods. And of course, our community has been so resilient in the face of these storms, so supportive of one another as we work to recover from our 500-year floods that we all know by name: Harvey, Tax Day, Memorial Day, but also the storm since. You know, we know that sometimes these rainstorms that we've had will cause localized flooding, things that don't make the news or stay in the news as long, but cause tremendous damage for people and communities across our region. And so it's really important for us to know and do all we can to prepare. And of course, we've been going through this rebuilding process for several years, and I know that we've made some good progress. I know that there's still a lot of work to be done. That's something that we are all working on together, both on big projects and small projects, working together with Harris County Flood Control District, working with the Army Corps of Engineers, making sure that we're doing everything we can to really understand and respond to these problems. But I also know that these traumatic events are still very much present for many people who live in our community. And I remember in my very first town hall, people coming up and talking to me in particular about what we could do to get past the trauma that's been caused by the flooding and the fear that they still have every time that we get a heavy rain. So before I even got here, as I said earlier, I started talking to Steve Costello and folks in our community about what we could do. And I think it's so important for all of us to work together and to make sure that the city, county, and federal leaders on both sides of the aisle are working to secure aid and resources to recover, to prepare for the next storm with smart policies. We know that that can make a huge difference. And so I'm so glad to be here with these incredible leaders. And I think you've heard from all of us at different times, and you know personally probably by being on this call that in Houston and Harris County, the flood insurance really is just critical to secure our homes and our families from disasters. and to protect our financial security. So today, what we wanted to do is provide a space where we can take your questions about FEMA's new flood insurance methodology and get those questions answered. We know it can be hard to navigate. We are navigating it ourselves. And we know that you want to keep your families, your loved ones, your neighbors as safe and prepared in any kind of rain event or storm as possible. So we want to talk briefly about how best we can do that. And as I said earlier this month, FEMA implemented its risk rating 2.0 methodology using industry best practices and cutting edge technology to get a better understanding of a property's unique flood risk and how that risk can be reflected in the cost of your insurance. National Flood Insurance Program policyholders who signed up for new policies on or after October 1st of this year will have their rates calculated under this new methodology. And in April of next year, as I mentioned earlier, all remaining policies will be subject to this new methodology. I've seen estimates saying the majority of Texans will be paying more because of risk rating 2.0. And that translates to about 86% of Texas's national flood insurance policies. The vast majority of these policyholders are expected to pay an increase of up to $10 a month. Because of Harris County's unique position, we have approximately 320,000 active policies. So we lead the state in the participation in the flood insurance program. And the majority of these policyholders are looking at these changes. And so while it does represent a more accurate maybe real risk because it takes into consideration other factors and property characteristics, I know how important it is to make sure flood insurance continues to be affordable. And that is a priority here in the Congress. We've been talking about how we can help address the changes and make sure that those who need it most can afford to get that flood insurance. So I look forward to hearing tonight from Mr. Quirone about his presentation and how these changes will affect our community. And so I know that they will both be happy to answer any questions you have about the NFIP program and its new methodology. And I will be glad to answer any questions I can as well. But before we turn to I guess, Gilbert and Steve, first, I'll hand it over to Councilmember Abby Kamen. Again, a real champion for our community and an incredible partner. So grateful for your leadership, grateful for your partnership, and glad to be with you tonight.
Well, thank you, Congresswoman. It's really your leadership and advocacy, especially when it comes to flood protection at the federal level, that enables us at the city to really do what we need to be doing to help protect residents. So I want to first off acknowledge you because we cannot achieve a resilient Houston that's capable of withstanding and recovering from flooding without all levels of government working together. And it's such a privilege to be able to have that type of partnership with you. Many of you who are listening, and I think we have hundreds of people that are tuning in right now, which again, just highlights how important an issue this is for so many families. But many of them know on the different projects that we've been working on, but really tonight is about how new insurance rates are going to impact each one of us and our families. And I could not ask for a better voice in Washington to pursue the vital federal resources and relay the concerns that some of our residents have. I also really quickly want to recognize your staff who has been really amazing in working with us to launch tonight and everything that goes on behind the scenes. So please relay my appreciation to them. And I also want to thank each of you that's tuning in, all of our residents. We, as your representatives in local and federal government, are working tirelessly to protect our community from the threat of flooding. But again, it does remain a threat, and flood insurance is that vital tool to protect all of our homes and our livelihoods. And as the Congresswoman said, many in our district are going to be impacted by these rates because of the consecutive floods that have occurred in so many of our neighborhoods. I've personally gotten many questions about how the new rules to NFIP are going to impact us. And again, it was the Congresswoman's and my intention to provide an avenue for you to hear directly from FEMA, to ask questions. And I really appreciate, while we'll try to get to as many questions as possible tonight, there were so many that we will actually, thanks to the Congresswoman, be submitting those questions to Gilbert, and his team will actually be trying to respond individually if there were more personalized questions. So even if you don't hear your question tonight, they will be taking it back to respond and hopefully get an answer for you. So Gilbert, thank you for doing that as well. My ask is for anyone that's listening tonight, please take back what you're learning into your neighborhood, into your community, and help make them aware as well of the changes that are coming. We don't want anyone to be blindsided, and you play an important role in that. So in addition to appreciating FEMA for being here tonight, I really quickly wanted to introduce to you all Steve Costello, our Chief Recovery Officer. He wears many hats at the city. He has an extensive background in flood control and drainage. He's an absolute authority on flooding and stormwater management, having advised governmental agencies, municipalities, county, state, all different levels, you name it. And he's also responsible for coordinating the city's efforts in this regard. So we'll be hearing from him later on. And Steve, thank you for joining us. Steve, actually, I have to give a lot of credit to. We've been talking about these flood insurance rates, and this was also him driving the need to educate constituents as well. So Steve, thank you for really pushing this issue alongside myself and Congresswoman Fletcher. I really appreciate your work and look forward to hearing you. But first, again, I'll hand it back to Congresswoman Fletcher to kick off for FEMA what I hope will be an informative presentation.
Terrific. Well, thanks so much for that. And I really do think it's important and useful to get right into the questions. And so I'm going to just turn it straight over to Gilbert Quirone from FEMA. And he's the Regional Flood Insurance Liaison for FEMA Region 6, which includes Texas, as well as Arkansas, Louisiana, New Mexico, and Oklahoma. So we know what a big territory that is, and really appreciate the time that you're spending with us here in Houston tonight. Thanks so much.
My pleasure. Thank you. Are we going to be able to get the presentation up, please? There we go. All right, I'm going to go ahead and turn off my video to help just stop with any technical issues. So my name is Gilbert Quirone. I am the Regional Flood Insurance Liaison for FEMA out of Region 6. My roles and responsibility are interact between our insured, our customers, and flood insurance, or anything that involves flood insurance, such as filing claims, such as concerns about overall premium costs, and to provide education outreach, as we're going to do tonight. Next slide, please. So as we've heard several times tonight, that we are transitioning the methodology of how we write flood insurance. The legacy system has been in effect since the late 70s. And while it's been actuarial sound, it is complex, it is confusing, and it is behind the times. Risk Rating 2.0 is a transformational leap forward. It is an opportunity for us to come in line with industry best practices and to address the issue of inequity by changing the methodology how we write the flood insurance. What I mean by that is, under the legacy system, you could have a house side by side, two houses, one valued at $2 million, one valued at $250,000. The current system of writing flood insurance only goes off the flood zone and the base flood elevation. They would both be charged the same rate for flood insurance. We all know that the house that is $2 million will far exceed damages than the house valued at $200,000. So under Risk Rating 2.0, we are addressing this. No longer will lower valued homes be subsidizing higher valued homes when it comes to flood insurance premiums. In return, all structures in FEMA's book of business, we have 5 million active flood insurance policies, will now be rated on an individual risk assessment from each and every structure. And one of the main variables that have been added on is the replacement cost value. Now, this is really important. We're going to see roughly 2/3 of policyholders across the United States will have a reduction in their flood insurance premium. Those are the older pre-firm houses. Those are the houses that have a very low replacement cost value. And they've been paying the same rate as higher valued homes this entire time. We are finally addressing that. Now, when I say we are changing the methodology, we are revamping the way flood insurance is written. And what I meant by industry best practices is, if we can go to the next slide, please. If you look on the left, that was what the legacy system used to write flood insurance. In essence, we really just looked if you're in the special flood hazard area, and then there was two types of flooding that we took in consideration. One of them was flooding from riverine, and the other one was flooding from coastal storm surge. We compared that to the base flood elevation and the structural elevation, and that was really all we used to determine the risk associated with that flood insurance premium. But in reality, a home can face multiple perils from flooding, and we have now taken that in consideration. If you look to the graph on the right, you'll see the rating variables. Now we have 6. Instead of the 2 that we had before, we had 6. And they're going to be distance to ocean, coast, river, distance to flooding source. They're going to be stream order, flood type. Now this is a big one. The flood type is fluvial or fluvial. One of them is from riverine. One of the new variables being added in is rainfall events. I'm sure a majority of you have heard of NOAA Atlas 14, and one of the things that really impacted Harvey was that we didn't take in consideration the increase of rainfall events, not just in Texas, but across the country. Well, we have taken those in consideration. Other variables are going to be the ground elevation and surrounding elevation. So we're going to ping the house's location. We're going to be able to determine by our geolocation tool that was a proprietary product we had built just for this, that we are going to be able to look at the ground surrounding elevation and use it as a direct variable on the flood insurance premium. We're also going to provide the first floor height. Now, this is important because as the regional flood insurance liaison, one of the worst things I have ever heard is that we can't afford a flood insurance because we can't afford the elevation certificate that is needed to get a flood insurance policy. Well, FEMA has procured what's called the first floor height tool through CoreLogic. They are going to provide they're really going to answer the question is, what is the distance between the lowest shade grade, which is the lowest part of the foundation touches the ground, and the first floor? And we are going to provide that information for all of our insured. So there will no longer be the need for an elevation certificate for flood insurance purposes. And we're also going to take in consideration construction types and foundation types. We have learned that wood frame construction suffers more damage than masonry type construction. So if you build your home using brick, other type of masonry products, you're going to receive a lower premium than if you were wood frame. This type of incentivizing mitigation is really important moving forward on a risk rating 2.0, because we do have discounts that are achievable under risk rating 2.0. But let's talk about some things that are not changing. Let's go ahead and go to the next slide, please. So statutory rate caps on annual premiums are not changing. Bigot Waters 12 and Hafaya Homeowners Flood Insurance Affiliability Act of 2014-2015, we set statutory caps. Congress set caps on how much FEMA can raise flood insurance premiums. And that cap is remaining in place at 18%. We cannot exceed that only in a few cases, such as a house that may be deemed severe repetitive loss. That means it has multiple losses that have far exceeded the valuation of the home. But most policies, far and by large, will have an 18% cap on them. Flood insurance policies will not increase more than 18%. Now, the availability of premium discounts are not changing. As I mentioned earlier, pre-firm will still receive a discount, and so will newly mapped. Now, those discounts are going to be in the way of a lower glide path. You're going to hear me say glide path several times through this presentation. And a glide path is simply a way to achieve the full risk premium, and I'll talk about that here more in a few minutes. Another thing that's not changing is the ability to assign an existing flood insurance policy to a new or prospective buyer. We call those, people call them transfers, but in our lingo, it's called an assignment. So it is still very beneficial to maintain your flood insurance policy. And if you are on a glide path and you do have one of these discounts, it can still carry over to a prospective buyer, makes that house more marketable, makes that policy more marketable. The use of flood insurance rate maps are not changing. However, they will not be used to determine the overall flood insurance premiums like they once were. What they will be used for is to determine what is called mandatory purchase of flood insurance. If you live inside of a special flood hazard area and your mortgage is touched by federal dollars, now think of Fannie Mae, Freddie Mac, VA, HUD, those are all federal mortgages. Then mandatory purchase of flood insurance will still be required through your lender. Now, other things are not changing is the availability of premium discounts for the community rating system. Now, Houston is a CRS member community, and all your constituents are receiving a percentage discount because of the additional hard work the city has put into maintaining a high level in the CRS. One of the things changing about this is before the CRS program percentage discount only applied to those who lived inside of the special flood hazard area. Under risk rating 2.0, I'm happy to announce that that percentage discount will now be available to every policyholder in these jurisdictional boundaries of Houston. So if that percentage discount is 20%, that will now be carried by every policyholder in the jurisdictional boundaries. The only caveat for those outside of the special flood hazard area is that their policy has to be at the full risk premium first before they can achieve that. Now that I mentioned full risk premium, let's go ahead and go to the next slide, and I'm going to show you what a declaration page is going to look like under risk rating 2.0. Now, these numbers are not actual numbers. These are kind of give you a visual representation of what to expect on the declaration pages provided by your insurance providers moving forward. Under risk rating 2.0, we are now going to provide all of our insured a number that is called their full risk premium. This has never been provided before. Under the legacy system, HFIA requires that we increase flood insurance premiums every year, no less than 5%, but no more than 18% until they hit full risk rate. The full risk rate was never identified. So in reality, those increases would have continued forever without end. Under risk rating 2.0, we now have identified the full risk rate. So once your policy has hit full risk rate, unless there's a significant change to the ground information or the insured changes the amount of coverage or the value of replacement costs, the value of the home changes significantly, they can anticipate no further increases under risk rating 2.0. Now, if you'll take a look under here, you have the full risk premium on the top of the page, but on the bottom, you have the total annual payment. Those are two different numbers. The full risk payment is what your policy will be when you hit the full risk rate. But since we are not allowed to increase flood insurance premiums more than 18%, they will start with what they were paying the last year. In this particular case, the annual payment was $1,016. So now that the full risk premium is higher than the annual payment, this particular policyholder will increase 18% a year until the annual payment matches the full risk payment. And then the increases will stop. Now, this is a mock-up. I have seen some actual declaration pages, and they are very similar to this. What's important is that all the discounts are added in, such as the CRS, the mitigation discounts, and those are really important. And we'll talk more about those, and we'll be able to answer questions on those. So the next slide is a nationwide breakdown of how we anticipate the risk rating 2.0 to go. Now, on average, we have 5 million policies in FEMA book of business. We anticipate 23%, almost 1 million policies, to experience an immediate decrease once they transition to risk rating 2.0. Now, we are losing some of our popular products. We are losing what's called the preferred risk policy. We are losing that because the preferred risk policy was not based on any individual risks for a building. It was, in essence, you're in a zone. And since you're in this zone, this is what your pay scale or your rate schedule will be. Now we have the ability to do an in-depth individual risk assessment for every building in our book of business. So with that being said, we're going to rate every building according to their true risks. So even though PRPs are going away, preferred risk policies are going away, we do anticipate an increase in policies that did have a preferred risk policies because they were not rated on risks before. They were rated on being in a zone, and that was really it. Now, in a few cases, we will have some, about 11%, that can experience increases anywhere between 120 to 240 per month. Those are going to be far and few between. One of the things the risk rating 2.0 is bringing to us here is a cap on single family homes policies. Right now, believe it or not, under our existing book of business, we do have some policies that can exceed $45,000 a year. For most people, that's just unattainable. Under risk rating 2.0, the most high risk single family homes will not exceed $12,125 for a year for their flood insurance policy, a significant decrease for what the maximum amount that we are seeing under the legacy system. Now let's take a little bit more of a look of a Texas breakdown. Now this is state specific. I wasn't able to break this down for jurisdictional boundaries, but Risk Rating 2.0 Equity in Action is a website. Now on this website, you can find the state profiles and actually break this information down by zip code. I didn't have the manpower to break that down by zip code and create products that are easily to see, but I'm sure your constituents are really smart and be able to pull up their zip codes, and maybe someone from the city of Houston can create some type of product. But under the state breakdown, for the next slide, please. There we go. For fully 14% of that, well, we have approximately 760,000 flood insurance policies in the state of Texas. 14% of those will experience a decrease upon transitioning to risk rating 2.0. Now, we do see almost 80% of policies can experience an increase. Now that can be anywhere from $0 to $10 per month. It depends on the individual risk assessment of that. Now we do have about 7% that's going to be in the higher risk bracket that can go anywhere between $120 to $240 a month. But by far and large, we have about 80% of our book of business in Texas that are going to experience incremental increases now that they're going to be based on the individual risk assessments for their policies. Now let's move on over to the next slide, please. I already touched on this a little bit, and I'm under, I want to leave as many, answer as many questions as we can go. So let's go to the next slide, which is our phased approach. Now, this one is really important for this constituents to hear. We have already initiated Risk Rating 2.0. It started October 1st for new business. But what is not known, we try to get the message out there as much as we can, but some people are missing this. If you have a renewal for your flood insurance policy that is after October 1, but before April 1, 2022, you can get two different quotes. You can get a quote under the legacy system, and you can get a quote under Risk Rating 2.0. If your quote under Risk Rating 2.0 gives you a better premium, it gives you a decrease, you can opt into Risk Rating 2.0 at that time, or you can choose to remain in the legacy system and then transition to Risk Rating 2.0 in April 1, 2022, when all existing book of business transitions to Risk Rating 2.0 upon their renewal time. So last slide, please. So FEMA just didn't do this on its own. This was an effort between universities, between engineers, between our what we call the write your own partners. Those are the 60 odd companies of insurance providers who write flood insurance on our behalf. We had mitigation experts, we had actuaries on here, we had industry's best practice, the brightest minds for private sector insurance, all played a part in this. We've also created new products using private sector, private sector companies such as CoreLogic, such as Cat Risk. We've incorporated the newest and best data from the Army of Corps Engineers, from NOAA. We have created new products that we believe are not only going to help with the Risk Rating 2.0, but help with other branches within FEMA moving forward. So that was a really quick breakdown of Risk Rating 2.0. I have a presentation that's 6 hours on Risk Rating 2.0. We can talk about this for a lot. So now let's move on. And I believe we're going to go to Mr. Castillo, and then I'll come back to try to answer as many questions as I can.
Steve, I think you're muted.
There you go. I mean, in the interest of time, I just want to talk a little bit to the community about what the city's role is in actual flood insurance. Basically, we're the participants in the National Flood Insurance Program. And because we are a participant in the National Flood Insurance Program, there are a couple of things. Our community is able to buy flood insurance, and it's always been a subsidized product for our community. One of the other roles that we play is what Gilbert was talking about, which is a community rating system. Based on our flood insurance and based on our flooding policies, we are actually better than minimum federal standards. And as a result, we get a credit that is applied to all flood insurance policyholders within the city. It's nice to hear that Gilbert was saying it's not only limited, which is currently limited to just within flood hazard areas, but now it's going to be all policyholders inside the city limits. And so we are one of the highest rating major metropolitan areas in the country relative to the CRS system. And we're really proud of that. And then finally, I saw a couple of questions briefly about MapNext and the changing of the flood insurance maps. We do not participate in the actual preparation of the maps. Our sister agency, Harris County Flood Control District, is doing that. And if you want to get an update on their timeline, please go to their website, Harris County Flood Control District website, and just type in MapNext, MAAPNEXT, and you'll see, you can scroll down to their timeline. Their current timeline is that they'll have some preliminary information forwarded to FEMA in the next couple of months. And then shortly thereafter, we'll see preliminary maps. Once the preliminary maps come out, we as a city will be responsible for administrating our flood insurance policies according to those draft maps, even though it'll take another 18 to 24 months to become final maps. But by law, we are required to use the most available data. So that's really where the city's functions are relative to flooding and flood infrastructure, as well as relative to these flood insurance rates. So I'm going to turn it over to the moderator, I guess is going to be Aaron, taking care of some of the questions, and whatever questions that are non-FEMA related, I'll be happy to try to address them if I can.
Wonderful. I will start with a question from Gail. Where is a link to fully show the FEMA changes to our property price for information on insurance? So I think you mentioned a site in your comments. I think it'd be helpful to give folks that website that they can go to.
Yes, Risk Rating 2.0 Equity in Action. It looks like a general just website at first, but if you scroll down halfway down, you'll see a link called Technical Documents. And in that technical documents, you'll see examples of what's called a premium calculation worksheet. And it gives multiple examples about how each variable is weighted. And once again, those are not real numbers, but it gives you a really good idea of how the calculation worksheet will play a part in how the premium is determined.
Okay, and we will put that in the chat box for folks so that they can click on it easily. Nora had a question. How are the floodplains determined?
So the floodplains are determined by a, it's called a study. Now the studies are done in person, boots on the ground, and also by a lot of LiDAR, planes flying over, they shoot down special laser emitting diodes to come back, and they go off of a model that represents what we call the 1% annual chance of flood. Now that does not mean water is there. That means if we exceed a 1%, this is where we anticipate water to be. That's why a lot of times you'll have homes that will say, I've been here 30 years and never seen water. Well, that's probably because there's never been a 1% annual event in that specific area. So we go off a 1% annual event for all of our maps. Now we do have a cooperating technical partners such as Harris County Flood Control District, which can increase that. In fact, the MapNext product, we don't anticipate new maps coming out until 2023. It was this project is funded by FEMA by a grant, but Harris County Flood Control District is doing all the work. They are doing the study. They are putting the boots in the ground to capture the most accurate ground truth that they can before the maps go active in 2023. But it is a time-consuming process. When FEMA initiates a map project, it can take anywhere from 2 to 5 years and cost millions upon millions of dollars.
Okay, thank you. Robin asked, how was the new assessment of risk developed and how will they adjust the new risk versus previous claims?
So under Risk Rating 2.0, prior flood loss history, all of our insured are starting with a clean slate. So let me go into a little bit more detail. Prior flood loss history will be a direct variable on how your flood insurance premium is determined. But since this is a new process, all your previous flood loss are not calculated under risk rating 2.0 until your first loss, until your first claim under risk rating 2.0. And then all the prior flood loss will come back into play. So you're starting with the clean slate. It's the best way we could do that. It gives homeowners the opportunity to mitigate, to make their home more resilient, maybe follow some flood resistant materials in areas if they flooded before. But everyone started with the clean slate. But eventually, if they have to file a claim under risk rating 2.0, those variables will come back in play.
Okay, thank you. We got this question a couple different ways. So Mary asked, if a person has national flood insurance, do they remain eligible for assistance from FEMA in the event of a flood?
Yes, but under FEMA's eyes, we cannot duplicate benefits. So if you have a flood insurance claim, now if you're underinsured maybe, and there's some individual assistance is not my areas of expertise, but there are some other programs where you still could be eligible for certain benefits. That's why you'll hear us say that if you have flood insurance policies, still please register for disaster assistance. Let the professionals determine who you or what you may be eligible to receive.
Thanks. And Aaron, I just want to chime in there too and say, of course, many of us do know about the individual assistance and the FEMA assistance that comes in after a disaster. And that while that's separate from the flood insurance policies, obviously when there is a disaster, folks are dealing with all of these things simultaneously. And so I just want to remind everybody that our office, our team is here to help whenever people in the district need help with a federal agency. And so that would include FEMA, as well as, of course, many people took out SBA disaster loans after Harvey, as well as, there have been some other loans over the last year and a half with the pandemic. But certainly anytime that you are dealing with a federal agency and need assistance, I just want to put in a reminder that that's what our constituent services team here in the 7th Congressional District is here for. Thanks.
Thank you, Councilmember. And that's true here at the city. I get a lot of emails from people asking for assistance. And even though we don't provide the assistance, we do provide assistance in helping them get to the right people, whether it's on the county level or on the federal level.
Okay, I'll get into some more of the technical questions that we got submitted. Brian asked, if our home is raised above the 500-year floodplain, as is required by new construction in Houston, will flood insurance be required?
If you have a mandatory purchase of flood insurance, yes, it would be.
Yeah,
Your
I want to jump in real quick for a question. And I want to remind everybody that what the new system is looking at is both riverine flooding as well as urban flooding. They call it perluvial or heavy rainfall. And it doesn't matter where you live, you need flood insurance. And no matter what. And it's probably the most cost-effective flood insurance, especially if you're out of a hazard area and you're only subject to maybe what we would call urban flooding. But everyone should have flood insurance.
And it's important. And Steve, thank you for bringing that up. I think it's also important to remember the distinction between home insurance and flood insurance, and that they are in fact separate. A lot of people, and we unfortunately see this in so many, in the aftermath of disasters, they say, oh, I thought I was covered. And flood insurance is a separate purchase. So again, echoing the message of it is so important, whether it's required through FEMA or not, to make sure that you're covered and that your family is covered with flood insurance.
Thank you. Jordan asked, if your home didn't flood, but you're in an area that did flood, will the insurance rates go up? If you're in a flood zone, but your home never flooded, what recourse do you have? Could you still use risk elevations to change the high risk rate?
elevation is important. It's just as important under risk rating 2.0 as it was under the legacy system. The thing to remember is we are going to go off of more individual risk assessment. So elevation alone is not going to maybe lower your premium anymore, because at one time, if you elevate it, it could lower your premium. But that was when we were only comparing your risk against either flooding from coastal storm surge or from riverine flooding. But now we're going to compare it to coastal storm surge, riverine, fluvial. We're going to compare it to tsunami if it applies. We're going to compare it to Great Lakes. So there's new variables being added in. So the elevation is still going to help, but you may not see as much help as it once did before in the past.
Okay. Larry asked, after Harvey, we elevated our house. If that will be a factor in our new insurance rating, how do we communicate the fact that our house is now material elevated, and to whom?
So we should have that new elevation material. When we created the first floor height tool, we're able to determine the first floor height for almost 80% of the buildings in our book of business. Now, however, that doesn't mean we're always right. If you have an elevation certificate, especially after a mitigation project, a post-construction elevation certificate, you can verify that information. In fact, if you submit that information into FEMA and we show that that information is better, we're going to always give the insured the most advantageous rate that we can. So that means we would accept the information on the elevation certificate and incorporate that into our own calculations and give the homeowner the best possible premium.
Okay. And this might be a good follow-up question then. How can we potentially challenge higher rates?
Elevation certificate is one way. A new variable for risk rating 2.0 is replacement cost value. So if you have some type of a professional appraisal, or if you have something different from the city's tax appraisal rolls, something that shows that the replacement cost value is a different amount, those are two ways to really offset the or contest the information that we're using. We are using tools. It's an algorithm. It happens behind the scenes. So we are allowing homeowners to submit this information to compare it. And if it does lead to a more advantageous rate, then we are all for that.
Aaron, can I ask Gilbert a direct question relative to that? So Gilbert, you in your presentation, you were comparing two side-by-side houses, one $2 million and one $250,000. Is it now a policy, the new policy will allow people to insure for higher amounts other than, let's say, the limit of 250,000?
No, those are statutory amounts set by Congress. We are not, a risk rating 2.0. We changed a lot of things, but we did not change anything that had to have a statutory approval. So no, those are statutory amounts. 250,000 building for a single family home, $100,000 content. Same for business, 500,000 building, 500,000 content. The increased cost and compliance also is a statutory requirement. So we were not to change that. It's still up to $30,000. So we could not do that. Those are examples were just to show that even though the higher valuation home it will achieve damage, a lot more damage, a lot quicker than a 250,000 home, that they're paying the same premium.
Yeah. Okay. Thank you.
Okay. Peter asks, what are the best first steps to estimate the potential costs for someone thinking about being a first-time homeowner? So if someone's looking at a property, what would be the first steps for them to assess this?
Well, location is always important. We have 6 new variables that are going to determine the overall flood insurance cost. If someone wants to live near water, the rivers, the lakes, they should be prepared to experience increase in flood insurance costs, especially with mandatory purchase of flood insurance for federal mortgages. The further away you can live from the direct variables, the better off you're going to be. 5 million policies in our book of business. 1 million of them are going to experience an immediate decrease. Well, those are all going to be 1 million in the interior of the United States, your Nebraskas, your Wyomings, your mountains of Colorado. Those further away from the variables are going to achieve a lower rate. Now, that doesn't mean that the entire state of Texas is going to be very expensive flood insurance. There's going to be some cases where I'm going to use my own personal preferred risk policy that I had decreased almost $300 because I bought my house further away from flooding source. I try to get as far away from water as I could. So they can experience decreases as well. So look for those higher elevations for natural terrain. Look for construction methods. You want to build your house out of masonry. You want to have an elevated foundation. Remember, if I know slab on grade foundations are popular in Texas, right? But it doesn't allow the unimpeded flow of water to go underneath it. By having an elevated structure, pure pylon post, even on shear wall or crawl space, allows water to flow through unimpeded. And that way it doesn't provide that hydrostatic pressure that builds up on the walls and causes implosion. You know, it just allows the water to go through. It doesn't cause a negative impact, because when you build slab on grade, oftentimes you bring in fill. You bring in fill and you create a dirt mound, right? Well, water has to go someplace. So it's going to come up to those mounds, and then it's going to go to your neighbors. Adverse impacts, unintentional, but they happen all the time. So those are the type of scenarios I would look for. I would look for higher terrain and then build construction from there. As risk rating 2.0 is designed for new construction, in my personal opinion, new construction has the ability to receive the most amount of discounts under risk rating 2.0, both mitigation and statutory discounts. Get with your floodplain administrator for the city of Houston and ask these questions. How do I receive my venting discount? How do I receive my construction discount? How do I receive my machinery and equipment discount? That could be 5%, 3 to 27% discount for the venting, 5% for machinery equipment. You add that on, and I looked this up while you're talking, Steve. City of Houston is a 5, CRS 5. That means every policyholder in Houston receives a 25% discount already. So you start adding these discounts as a new construction, and you can receive substantial savings.
And Gilbert, can I ask, when you said earlier that people can supply that, where should they go? Do they work with their insurance, with the plan? Is that where somebody would submit that information, or sort of what would be the steps for that person?
Well, the first step would be discuss this with the floodplain administrator for the city of Houston. Make sure that the plans are going to provide the discounts that want to be achieved at the end. But you wouldn't be able to apply for the discounts until the construction is complete and you're ready to actually write the flood insurance policy. At that time, the homeowner will work with their insurance provider. A lot of these discounts are self-reporting, but they do have to have necessary and supporting documents to show that the discounts are achieved, such as the venting, engineered document saying that the flood venting meets the criteria for 1 square inch for every 1 square foot of the crawl space area, or the construction type is the proper type of material that will experience less damage during flooding as opposed to wood frame. So a lot of this is self-reporting with just the supporting documents.
Yeah, and to bear in mind, our floodplain administrator is a young woman by the name of Joyce Morrow in our permit department. If there's anyone has any questions, wanted to reach out to her, you can send me an email and I'll go ahead and forward it over to Joyce. But bear in mind, any request for insurance rates, discounts, or insurance rates beyond what we're doing in terms of permitting has to be with their insurance broker, because that's not what the city does.
Thank you. Very helpful. So a couple of people had this question. So my home is never flooded, but I've always purchased flood insurance. If I sell my home, can I sign over my existing policy to a new seller to keep the premium low?
Yes, the assignment of a policy is still carrying over to risk rating 2.0. So that's actually very advantageous of them, because under risk rating 2.0, I mentioned the glide path. Well, the homeowner, when they start the glide path, will start the glide path at the rate they last paid. Okay, so if you had a preferred risk policy, and this the hypothetical of that preferred risk policy is $571, that will be the starting point. And then you will experience an 18% glide path moving forward until you hit that full risk premium number. So if you have a very low starting point, it can take you years to achieve that full risk premium, giving the homeowners time to plan accordingly, put money to the side, and then roll that over to any potential prospective buyers. So yes.
Okay, and then the other question is, what if anything will be grandfathered? Lorraine asked that.
So let me tell you this first. Right now, under FEMA's book of business, 5 million policies, less than 4.8% of those policies are grandfathered. That's about 165,431 policies nationwide. We don't have a lot of grandfathered policies anymore. We have slowly, they have slowly reached the point where grandfathered premiums are no longer advantageous to those insured. But because of this, and to reduce the complexity, we are no longer going to have any type of grandfathered products under risk rating 2.0.
Okay. Francis asked, are there protections for senior citizens to allow affordability for persons on a fixed income?
That's a great question. So this is one of the times I don't like this position. Risk rating 2.0 was done because our system was archaic, it was confusing and very complicated. But one of the things that is not in our criteria to use to determine flood insurance premium is affordability. We have submitted several studies to Congress to try to bring affordability into the fold, maybe by some type of cost means or income to help. But right now, affordability is not a direct variable, is not a direct action on FEMA's part to determine flood insurance premiums.
And I'll just chime in very quickly after that, because I think it is important to know that there are certain things that members of Congress can do, certainly working through the process. And it's really important to know that those recommendations have been made and hopefully sent to the appropriate committees. Certainly there is legislation making its way through Congress right now. I heard a question earlier about the cap, the $250,000 cap for residences and $100,000 for contents, as well as the separate 500 and 500 business cap. And certainly there are ongoing discussions about raising those caps, I actually just filed a bill last week to extend temporary housing assistance under FEMA, not the same thing as flood insurance, but really taking the lessons we've learned in all these different disasters to try to get people the help they need, but addressing the cost, but also the coverage. And seeing if there can be more coverage is really important. So those conversations are going on here in Congress, and I do think it's. I just want to mention that. And for those of you who support those kinds of things or have ideas or things that would be useful for us, please don't hesitate to let me and my team know as we are trying to do things to help make this more affordable and more accessible for everyone. I can't echo enough what Steve Costello said, that no matter where you are in Houston, you want to have flood insurance. And so we want to make sure that everyone who needs flood insurance, meaning everyone in Houston, can afford the insurance that they need.
We've got a couple more minutes, so we'll try to get to a few questions. Jennifer asked, is there a limit on the number of times you can claim flood damages? Our house has repeatedly flooded.
No, but eventually the increased number of claims would lead to higher premiums. I did mention that the glide path experienced by most will be 18%. If you fall into the severe repetitive loss category, that glide path could be as high as 25%. So that's something we would like to avoid. And I know it's hard to mitigate slab on grade type structures, but I would encourage some type of mitigation, replacement of flood materials, elevate electrical components, reach out to the local floodplain administrator for other ideas on how to mitigate a home that can't be elevated.
So before we exit that topic, Gilbert, does that mean when we have a house that's substantially damaged and then they have to follow our floodplain policies, or can they just leave the house the way it is, repair the house, and just absorb the higher flood insurance premiums? I think that's really where that question's coming from.
Well, no. So they said for follow claims. They didn't say substantial damage. So the only way a house can be determined as substantially damaged is if the community does it themselves. Now, if the community determines this house to be substantially damaged, they have to follow the ordinance, and that's a given. But
Well,
if it does not, if it does not equal the amount, or if the community does not deem it as substantial damage, they can experience multiple claims, and they'll be fine. But the premiums will reflect the claims.
Okay, thank you.
Okay, just a couple more. Catherine asked, are the flood maps being redrawn to reflect flood mitigation being done in Jersey Village?
I don't know, since this is a local study being done, they would have to ask that question from Harris County Flood Control District, their Map Next program.
Yes, and I would encourage them to reach out to Harris County Flood Control District for that question. I would assume that there is a specific time period that map next is reflecting. And whatever capital improvement projects that were done on, whether it's White Oak Bayou or any other stream at that specific point in time, it's what's reflected in the map next model.
Great, and we will put that in the chat. But Steve, can you remind people again where they can go to see those maps?
Well, the maps aren't available just yet. And so they're still in the process of doing all their calculations. And it'll be probably, I think probably sometime next year when the draft maps come out available for public comment. And then it's a 18 to 24-month period before they become finalized. But once the maps come out in preliminary use, we will then be using them to administer our flood insurance policies.
And I'll just add in terms of the timetable so that people are aware, I believe you can go to mapnext.org, but it's spelled MAAP next, NEXT.org. And there's a timetable there with flood controls maps.
Okay, we're coming up just at the end of the hour, but I'll add one final question. Lene asked, our insurance agent told us they can't tell us our renewal rates until the end of the month or so before the policies end. Is that correct?
I would encourage you to find a new agent. Agents have had access to the risk rating engine since September. Now, there may have been different internal procedures from each company. I know one company, even though they had the engine, they didn't want to release it to their franchise agents until they had their own internal operating procedures down. But it's been available. We have thousands of new policies under Risk Rating 2.0, and we have hundreds of thousands of quotes for Risk Rating 2.0. We have done specific training for agents across the nation. I was very disheartened to learn that 1,425 agents have taken Risk Rating 2.0 training for the entire state of Texas. 435 for Louisiana, and my other states less than 50. So training is out there, but it's like you can lead a horse to water, but you can't make him drink. I would personally shop around. I would actually go out and get 3 quotes, not because you're shopping for prices. Prices are going to be the same, but what you're looking for is a knowledge and experienced agent when it comes to the peril of flooding. If they are knowledgeable in writing a policy, they're more likely to be knowledgeable in submitting claims. And that makes a world of difference if you have an agent who knows what they're doing.
Thank you, Gilbert. Well, that brings us to almost to the end of the hour. So I will pass it back over to you, Congresswoman and Council Member.
Can I have just one more second, please?
Yes, please.
Okay, so there was one more question. So I have not had flood insurance in years. Do I need it now? Yes, you do. Flood insurance is a single peril policy. Homeowners insurance does not cover the peril of flooding. And I was telling this group earlier, the entire country is a floodplain. It's just a question of what risk you live in. And at no times on any FEMA maps will you ever find that this area will not flood. It's going to happen when you least expect it. And a flood insurance policy is one sure way to help you recover from that peril of flooding. So thank you. That's all I want to say.
Well, thank you for that follow-up. Again, I think it's really important for folks to know and understand that the flood insurance policy is important because it's not covered in traditional homeowners policies, that you need to get flood insurance to have coverage, which unfortunately too many of our neighbors have learned that they needed, especially in recent years in Houston and Harris County. So I will turn it back to Councilmember Kamen for any concluding thoughts, and then I'll just wrap us up with the questions we've done tonight with more to come.
Well, again, Congresswoman, thank you for working with me to launch this. Mr. Costello, thank you for all you do from the city side and working with every level of government. And as Steve said, my office is here, so is our recovery office in terms of connecting residents with additional information. And Gilbert, thank you for your presentation. I do know that a lot of it, we may want to break down into layman's terms for folks at some point, but I think that the starting point is going to FEMA.gov to the flood insurance risk rating website, looking at some of these maps to see where we will be impacted. Congresswoman, I know my staff was kind of doing some of the numbers, and unfortunately, some of our areas are going to be the most significantly impacted by these rate changes. Gilbert, I wish we could wave a wand and find higher terrain than what we have in Houston, but we have what we have. And I know we're doing as much as we can to make Houston as resilient as possible, from Project Braze and additional mitigation we're trying to do in the Southwest corridor, near the bayous, all the way north and south of our districts, east and west, you name it. But we are in this together. Please, again, tell neighbors about this, ask questions. We will continue to be a resource. And Congresswoman Fletcher, again, thank you for your advocacy at the federal level, because we cannot do this without you, without the partnership, and without the resources that the federal government can be providing the city.
Well, thanks so much, Councilmember Kamen. It's always a pleasure to work with you and to be your partner. And the same is true for everybody here tonight. Gilbert Quirone, so helpful, so knowledgeable, very direct, which is always very useful. And of course, Steve Costello, everything you've done for our city and continue to do is so, so important. So I'm really glad to be with all of you tonight. I will also note that I'm really glad we scheduled this for tonight and not tomorrow night, when we might have had a smaller audience and folks might have something else to watch around this time. But I'm really grateful that we were able to do this. And as Councilmember Kamen mentioned early on, we did our best to respond to the questions, especially kind of prioritizing ones we got a lot in different forms, but we will get all of your questions asked. That is thanks to our terrific constituent services team and the great team at FEMA that's going to work to get these questions answered. But this is an ongoing process, so please remember, if you have a question about this or anything else, if you need help with a federal agency, or if you want to share your thoughts with me at any time about what you think we should or shouldn't be doing here in Washington or back home in Houston, you can call my office anytime. My phone number in Houston, 713-353-8680, and my office in DC, where I am right now, 202-225-2571. So please don't hesitate to call. That's what we're here for. And I thank you all for being here, and go Astros.
And Congresswoman, I forgot one thing. I'm so sorry. In addition to my office, I did want to recognize, while she's not on screen, one of my colleagues, Councilmember Sally Alcorn, who represents at large the city of Houston, who cares about this issue. And since you put your information out, I'll put mine in the chat in terms of our office email for residents to reach out. And again, sorry to jump in, but I absolutely wanted to make sure we recognized our other partners working with us on the city level.
Terrific. Yeah, well, it takes all of us, and it takes a great partnership. We've got great leaders in the city of Houston, got great leaders in Harris County. And I can just assure all of you, I know my constituents are always asking and want to know whether we're working together. We are, and especially on flooding issues across the aisle, across the different departments and divisions and layers of government. We're working together because we know how important this is to our community, not just recovery, but planning for our community going forward. So thanks so much for being here. Great to see you all. And thanks to everybody who's participating. Take care.